are or at break even. Don't continue. The worst thing you could do to yourself is being so close to the goal and end up at max loss. So you could think about that. That's perfect. So let's see this. Oh my god, I can't believe we are finally working. Perfect. Now we are sharing it on YouTube and we can start our trade review finally. Guys, those who are new here, if you want to share your trades with us, they don't have to be from today. Any trade during the week which you feel not confident about, or you want to make sure that you traded it correctly, maybe there are some mistakes which you are not sure about, just take a screenshot similar to this one, multiple time frames, preferably 30 minutes before your entry, not only 10 minutes, so that we can take a look at the whole price action, and send it in the off-topic chat. Now they're done. What did you trade right there? What's the stock? What's the stock? What's the stock? What's the stock? $48. Is it Twitter? I think it is. Yeah, it is Twitter. That's Twitter. So let's take a look at what you did right there. This is the what chart? This is the 5-minute chart? Yeah, it's the 5-minute chart. Can you tell me what mistake you did right here? Right here. If it's short. What mistake did you do there? Exactly, third candle. Oh, it was a long. Alright, even if it's a long, it's not so extended from the 9 and the 5, right? It's a third candle, but I don't think it was parabolic. Was it parabolic? Let's take a look at Twitter. If it was parabolic, then it's totally fine. So let's take a look at that. Yeah, it's not that parabolic, to be honest. Wait, is that today? Yeah, it is today. It's after. Okay, not bad. To be honest, not so bad. Not so good because it's not so parabolic. You could see that it's dropping a little bit, consolidating, dropping a little bit, consolidating a little bit, dropping a little bit. This is not at the price action which I want to see for a parabolic reversal. I want to see just making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, just like that. And then you get that reversal candle, which is here. You got it. And then take it to the long side. Unfortunately, we didn't see this here. It wasn't ideal, in my opinion, for a long right here. And wasn't also ideal for a short. Not a long and not a short. Just avoid it totally. This here was an amazing short right there. This right here is decent short. It didn't work out. But if you take it to the short side here, it's decent. Decent, but not ideal. Why is that? Because the pullback is not even 20%. Or the consolidation isn't even 20%. This right here is 100%. This is the pullback or the consolidation, which is somewhere around 20%. Right? You want it to be at least 30% range consolidation, and then you go for a continuation. So yeah, this was decent, but not ideal. The reversal right here is good. Why is the reversal good? Remember what we said? Strong daily chart, it's 12-time high, right? Today it is weak, but it's on a strong daily chart. It dropped down. You are having a new 15-minute high. You are having a trend, a break of the trend line. This is the trend line. You have the break of it and an establishment of a new trend. This is where you can catch an extreme reversal to view up and above. This is like an A+ classic, what we explained on that how to catch falling knife part 2 on the for a lifetime webinar. Now let's see what you did right there. You tried to catch it one more time to the long side so early, right? One more time to the long side so early. You see this is the classic mistake when trying to catch a reversal. When you are trying to catch a reversal on each new 5-minute high, what's the first thing we're thinking about, guys, when we say that stock is weak? What do we think about this candle? What do we think about this candle? What do we think about this candle? Once you see new 5-minute high, what do we think about them? What would we consider them? We're not sure 100%. But we would consider that they are just weak. Yes, it is weak, exactly. We'll consider that it's weak, and that new high is exactly, it's a pullback. That's it. Exactly, Chris. Perfect. So the moment when the stock is so weak, the first new high, we don't consider this new high as a reversal. Do we know that it's a pullback? No. Do we need to know that it's a pullback? No. Are we sure about it? No. We don't need to be sure. We don't need to know for sure, right? You only need to assume. Because this is the most likely thing to happen. And out of 1, 2, 3. Out of 3 5-minute highs, only one worked out for a reversal. So you see that most likely it is going to continue dropping down. The moment you see a new 5-minute high, don't treat it as a reversal. The moment you see a new 5-minute high, don't treat it as a reversal. Treat it as a pullback because the stock is weak. The moment you see that the stock is changing the trend, then you could consider it as a reversal. And you could watch the webinar which I did, how to catch falling knife part 1 and part 2. Two different types of reversals. One you could trade, one you should not trade. Part 2 is really good on this one. You find a stock which is weak, you don't catch each new high. This is where people get chopped out. We explained that on that webinar. Then it's going up, pulling back. You see that the trend line was changed. Do we take it to the long side here only because the trend line was changed or broken? No, we don't do that. Why is that? Because this right here might be a better entry for a trend continuation. It could just offer a better entry for trend traders. And then continuation. You want to make sure that this trend line was broken and a new trend was established. This is your entry for an extreme reversal. Only this. And you would need to be, or you should have been patient for around 2 hours before catching that reversal right there. Does that make sense? Look at this. Classic, perfect example. Trend line is broken. Do we catch it to the long side for an extreme reversal here? No. Because this might, right here, might be just a better entry for people who are going into a trend. You want to see that the trend was changed and a new trend was established. Still, even if there was a new trend which is established, I wouldn't take this thing to the long side. Why? Anyone? Why is this not a good stock for an extreme reversal? Not the risk to reward. There is one good reason. Why don't we trade these type of stocks for an extreme reversal? Why don't we even look at it or for an extreme reversal? You could trade it to the long side for a scalp, but not for an extreme reversal. Why? Good. Not only the gap down reason, the weak daily chart, right? Weak daily chart, you could say it's gap down, it's downtrending on the daily chart, but when you see that the stock is downtrending on a bigger time frame, you don't want to catch it for a reversal, because if you want to catch it for a reversal here, that means you want it to go all the way to VWAP, which is 487 and above, which means that you want this daily candle to close as a hammer. How likely would that happen? Did it happen here? 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 How many times will that happen? Once in 10 days? Will you be trying an extreme reversal 10 times and only catch it one time and be happy about it? Not really. But you could try it, an extreme reversal to the short side on these days. If it goes to the upper side at the beginning of the day and then it starts to sell off, you could try to catch a reversal to the bottom side because it's weak on the daily chart. On these days right here, you could catch an extreme reversal to the long side. To the long. If it's selling off intraday, then it's making a new high, you could catch it to the long side for a full reversal to view up and above. Make sense there, Dan? Perfect. Now let's see what we have here. Bitang, and then we have Ma. Make sure to check that webinar, it will help you a lot. It's my work on reversals for over 8 months. Because reversals is my main strategy after the ABCD patterns. Now, let's see what you have right here. You traded snap. You traded snap for an ABCD pattern on the 15-minute chart right here, but you also traded it a little bit earlier. Let's see what you did there. So you tried to catch it to the short and you got stopped out. You tried to catch it one more time to the short side and get stopped out. One more time to the short side and get stopped out. No, and then finally short, partial, exit, and long, and made a profit right there. So let's start with this right here. No reason to get yourself chopped out trying to catch a parabolic reversal on the stock, which didn't even make a new 2-minute low. The least thing you could wait for is a new 1-minute low after a reversal candle or a new 2-minute low with a decent risk to reward. Now, this is the 5-minute chart, and this is something I usually mention. You don't want to catch a parabolic reversal if there is view up between your entry and your target level. So one short, two shorts, avoid them. Those two shorts, according to the rules, which I made in the webinar, should be avoided mainly because you have view up between your entry and your target. Let's go for the next entry, which is the third entry. This is avoided, this is avoided. This entry right here, no new 2-minute low. I'm not sure about new 1-minute low right there. Right here, you're having a new 2-minute low at least. After the doji, you're taking to the short side, which is decent. But unfortunately, we're still having view up. But I see that your target is above view up. That is decent. Now let's go to the long side. You don't want to take to the long side right here. Anyone, why don't we want to take to the long side there? Unless our stop loss is so wide, and I see that your stop loss was wide, and I like that. Because it's still extended from the 9 and the 5. We still didn't make a decent pullback. Right? This pullback right here after this huge move is not enough. It's 20%. Like this pullback is kind of decent after this full move. At least this right here looks like 30%, right? So yeah, this pullback is decent, but you don't want to take it to the long side on the way up. Come on, why did you freeze? Let's open you one more time. So yeah, you don't want to take it to the long side. Oh, that's good. We are removing some pain from our eyes. Now, you don't want to take it to the long side here for an ABCD pattern because it's still extended from the 9 and the 5. But if you do so, you want your stop loss to be so wide, and I'm happy about that. Your stop loss was wide. You took it to the long side here. You added on the way down, all the way to the C level. What is your stop loss here? I'm just telling you, do you have continued to average down? How much did you risk if you would have lost on it? My stop loss personally in this thing would have been the low of this level right here after those ads. At the beginning, I will enter this right here and I'll put my stop loss down here. It will be so wide of a stop loss, but I know if it will go up, pull back and continue going higher, I will add I was already in it right there. My average will be higher and I'll catch the second leg up. But I wouldn't have that type of stop loss. My entry here, my stop loss will be down there. If I continue adding there, seeing that the non-moving average gets closer to the price action, I will move my stop loss below that wick, which is a little bit below the 9 and the 5, just as a precaution. That would have been my stop loss. Initially here, after this pullback, it will be down here, and I love how much you held onto it. Good job. Alright, Mo, let's see what you did. So Mo traded Twitter. You traded Twitter to the long side for an ABCD pattern, and that was today is 21st, no, 22nd. This is yesterday. So you are trading this thing to the long side for an ABCD pattern on the 1 minute chart combined with a 5-minute open range breakout. Decent, not bad. Bouncing of view up. Is this setup bad? No, it's not. 40% pullback, which is not bad. ABCD pattern on the 1 minute chart, taking it after a doji, and it is getting you stopped out. Nothing to worry about. Taking it to the short side? No and never. For me, never shorting a stock against the 9 moving average on the 5-minute chart because it could make an ABCD pattern. I actually traded it yesterday and I cut it for a 1 minute open range breakout. It was amazing open range breakout, and I had this ad right here. Let me show you. Let me show you that. You see this? I'm taking it for an open range breakout. I'm adding for an open range breakout. I'm adding for an ABCD pattern on the 1 minute chart. That was my ad with a stop loss closer to the 9 moving average on the 5-minute chart. Unfortunately, my stop loss was a little bit tighter. I miscalculated the average after the ad. It was supposed to be a little bit lower, which got me out, and I missed the breakout after the ad. But yeah, you entered right here. I entered right here. Nothing bad about it. ABCD pattern on the 1 minute chart with a 5-minute open range breakout closer to view up. One thing. Remember the rule on open range breakouts? What are the rules? Anyone could remind me them? 1. Stock close to view up, which it was. 2. Move smaller than the average true range. Remember this. You want to move for an open range breakout to be smaller than the average true range just to have potential to run up. Look at this. $50 from $48.90. It went from $48.90 to $50. Look at this daily candle. Do you see that it's similar to the average true range? So it already did a move bigger or equal to the average true range. The rule number 2 wasn't there. So now that I'm seeing the daily chart, unfortunately I didn't see that on your chart, but now looking at the daily chart, this wasn't an ideal setup. I added here and I put my stop loss down there because the ad, I make exceptions from my rules, but I wouldn't enter right here for an ABCD pattern on the 1 minute chart with a new 5-minute high when it's close to view up, but the move is bigger than the average true range. Do you see why it wasn't ideal? Good. The short shouldn't be because we are going against the 9 moving average on the 5-minute chart. The long is good. You are trading an ABCD pattern when it bounced off the 9 moving average on the 5-minute chart on a new 1-minute high and partial all the way up. This trade shouldn't have been taken according to the average to the range. Our rules, remember the rules. The rules are the ones which are keeping us consistent. And my rules are backtested for a long time. They are working if I'm following them. That's why I'm sharing it with you. You can follow them, you cannot follow them. It's totally fine. We all have different styles, but my job here is just to share whatever I learned during my time trading. Now, this shouldn't be traded according to my rules. This shouldn't be traded according to my rules. This is an ABCD pattern bouncing of the 9 and the 5. Perfect. This should be traded, right? Double top right there, reversal pattern, exit all out right there. You taking it to the short side, not bad short side. Why is that? We're having low, high, low, high, low, high. So up until this moment, you're having higher highs and higher lows. Up until this moment, you're having flat lows, lower high. Then you are taking it to the short side, closer to the new low. The trend is changing. Is this a bad short? No, it's not bad short. It's a decent short with a pattern confirming that. Head and shoulders. I personally wouldn't have gone into this reversal because of it being at all-time high. I don't short stocks at all-time highs. This is just my rule. But I see it working out in this this time. And as you said, there will be exceptions. Sometimes those stocks will be working out. Reversals, even for stocks at all-time high, they'll be working out. But yeah. Now, taking it to the short side, partialing, adding on a reverse ABCD pattern, partialing more. And then you're taking it to the long side. Don't do that. Stock changed the trend. It could be making a lower lows and lower highs. When will you be interested in it? The moment the trend has changed and it made a new high. That is it. This would be a decent place to take it to the long side because it's breaking the low of the range and getting into the middle of the range. This is the long, right? This should be avoided. Remember, you need to avoid some trades. Some trades will just, sometimes they will work, sometimes they will fail. When they fail, you lose 2 hours. Then you are making 2 hours, you are at break even. Then you are making, for example, 2 hours. You got lucky here, but just assume that you would have lost 1 hour, right? Some trades should be avoided. This should be avoided. This could be a good winner. This is a good winner right here. This should be avoided. This is a good winner. Well done, Mo. You really managed it well. I like that your winners were bigger. Okay, sorry guys. I will be slower. I had a member emailing me. He said he's watching my trade reviews on YouTube with a speed 0.5 because he can't catch up with me in the chat room. So yeah, I'm sorry about that. Now let's go for snap trade. So snap, it's so long, right? It's really strong. And when we see a stock which is strong, the first thing we assume on the drop that it is a pullback. It's not a reversal, right? Now you're taking it to the long side here. Remember what we said on the stocks when they are extended from the 9 and the 5? Have your stop loss at the 9 and the 5 or closer to the 9 and the 5. If you want to take a stock to the long side when it's above the 9 and the 5, for a chase, make sure to have a wide stop. You can always add at the breakout. Always you can add at the breakout, right? This is the issue. You took it to the long side, that stop loss got stopped out. Then you're taking it to the long side and you're having your stop loss at the candle and you're getting stopped out. Remember the rules? Have it closer to the 9 on the 5, right? And at this stage, this would have been my stop loss. You actually went through this trade. Just to give it as a precaution, because the 9 on the 5 is an average. Right? It could break it. It could just bounce, go a little bit above it, bounce out of it, or break it. So you need to have a technical level somewhere a little bit below just to be a little bit safe. Better have wider stop loss rather than getting stopped out twice or 3 times and then finally catch a move which will barely get you your losses back, right? Now, this is good. Actually, this would have been even good because you're having a good hammer. You see that it bounced off the 9 on the 5 with a wick as a hammer, making a new high. You broke the low of the range. You are having a range and you are getting into the middle of the range. This is amazing. You could enter right there. You could enter right there and then just partial all the way up. The moment it's breaking the range and getting into the range, you just exit the break even. Because we don't want stock to get into the range after the breakout. Yeah, Jennifer, thank you. Soon you will be listening to it with the original speed. So first trade, let me see if there was a question. Okay, I think we covered that all, right? You're welcome. Now TC, let's see what you did with the SPY. Okay, the SPY is just as a reference. So you traded Netflix. Amazing. I like that. Was this today or yesterday? 20. Oh my god, the date. Second time I'm looking at my phone just to make sure that the date is correct. This is the day. Now let's take a look at this thing. Tried to bounce, but it held below. I see that. Made the reverse ABCD pattern and it broke down. Look at this. We'll love this, right? We'll love when a stock is breaking a range and then it's retesting. It's retesting. You see here, it's so clear retest. This is a good entry even here as a retest. It went a little bit inside the range, so we give it half of the range as a precaution. We gave it half of the range as a precaution. This is maximum we would give it. It tweaks a little bit up, goes down, safe entry. You are in the safe side. Try to catch your entry with a stop loss at the level where it bounced from, or give it a little bit more, half the range. Then at the breakout you could add. You entered at the breakdown. What was your stop loss? Why is my Epic Ben giving me some hard time? So this entry right here, if I take it, stop loss is only half the range. It's not a technical level, I know. You know, right? But you know that after stock breaking a range, you don't want to see it going into half of the range. No need to have it at the half of the range. Half of the range is enough. If it's working out most of the times, half of the range will be more than enough. And then it just shoots down. But really good job with your patience. Is it extended the 15? Don't care about the 15. Right? The most important thing is the 5-minute chart. Your entry is ideal on the 5-minute chart. 2. On a reverse ABCD pattern on the second candle. Best entry on the first candle. Best entry on the first candle, which is here. Decent the second, never enter on the third. Caesar, let's see what you share. So Caesar traded Plugg, and you traded this thing to the short. This is not bad. I like it. I mean, looking at this chart, I don't know how the daily looked like. I like Plugg for trade to the short side because on the daily it was gapping down. Okay, that's good. I see that. On the daily chart it gapped down. It was below all the 9 moving averages on the 5-minute chart, so you took it to the short side. Pre-market went short because the daily was rejecting the 9 and the 20 moving averages. So this was your first trade based on the daily chart, and that's smart. You could combine the bigger time frames. I wouldn't go to the short side here only based on the daily chart. I would short it right there if the bigger time frames are showing that it's weak, or if it's a pattern on the bigger time frames, the 30-minute chart and the 60-minute chart. Okay, but not only the daily chart. It's not enough just to know where to put the stop loss at. Now it's good. You're taking it to the short side. Really good partial, heavy size add, which is good. Because you see that it's breaking the low of the premium market, and you're taking to the short side, partialing at the daily level, added, which is not bad, right? It's the first 5-minute candle, small reverse ABCD pattern, adding, you're getting into the range, or into half of the range, and you're bailing of this trade. This is totally smart. I like that. Now, it's breaking up. After the breakout, you see that it's not either breaking out, and it's not retesting for a continuation. We don't like to see it getting into the range. Now we are getting our attention shifted back to short. Here I'm long biased, but I'm not taking it immediately to the long only because it broke up. I need to see a retest, right? Now that it didn't do that, I'm again switching to the short. Taking it to the short side there, I would have shorted it. Okay, you added. That's smart. That's smart. I like that. No reason to partial or exit. You are on the right side. This is a retest. You are having a clear range here. After a break of the range, you will have retests. Market makers are screwing with us with those pullbacks because they know that we get scared out of them, right, Caesar? You are scared. I know that. And market makers know that we'll be scared because of those candles, right? It breaks out, we want it to run, and they just get it back up right there. Nice ads right there, and I love that patience. That's amazing. So yeah, still well done. Now, Tony, let's see what you did there. Let me close this. Let me open this. Let me check what I have up there on my monitor. I have nothing. Let's take a look at Tony. You're welcome. Tony traded Snap. Now that's amazing patience. That's amazing patience. Look at Tony. Avoided all this chop right here. Avoided all this chop right there. Waited for it to go to the 9 on the 5. Fake breakdown. Close as a hammer. Getting your entry once it's getting into the range. Good patience with the entry, but not bad with the partial as well. Not bad. Partialing at the high of the day. A little bit too much partials right there. I would have made it one partial, another at the daily level, and then once it's making a new 5-minute low or something like that. But yeah, really well done there. I like that. Yeah, it was a clear ABCD pattern, and you waited for the pattern to complete. This was amazing. Remember, guys, all you need is one good trade. If you can be patient and wait for one good trade, and even get stopped out on it and then catch another good trade, you will be green for the day. You don't need to be done for the day early. You need to be done for the day well. If you miss this move here, don't try to catch it so early. Sometimes, and I bet 90% of us here are having that thought. When you see that it's dropping down here, you're telling yourself, okay, it's not ideal, but I will give it a try. Don't give it a try. Right? Don't give it a try if you're not sure about it. Unless you're so green for the day, you're above your goal, and you're losing nothing if you're losing one more time, or risking nothing if you're losing one more time, give it a try. But if you're flat, don't give it a try. Wait for the perfect pattern. You need only one pattern. If it goes without you, let it go. Wait for another pattern, right? If you sit in the market for 2 hours and then catch your good trade and be at the goal, it's better than a 9 to 5 job where you're sitting for 8 hours, right? Just be patient. X the unknown. Let's see what you traded there. You're welcome. So X the unknown traded NIO. 1 minute opinion range breakdown. Now let's take a look at the daily chart. Daily chart could be long, could be short. I like it to both directions, right? Because it could go to the 9 on the daily chart. It could break out. If it breaks out, I'm definitely long buys on it. So yeah, that's it on the daily chart. Now let's take a look at the 15-minute chart. Not bad to the long side. The moment it breaks the pre-market high, right? Especially if it pulls back at the open, and you did that. That was long, or it was short? No need to exit right there. No need to exit, right? And remember this, by the way, my rule for open range breakouts, the rule which saves me a lot of stop outs. First candle is bullish. If I want to take it to the long side, I want to see it dropping down, then coming back up, and I will take it to the long side. If I want it to the short side, I want to see it going up, then dropping down, and then I will take it to the short side. If I see that it's immediately dropping down, I'm not going to take it to the short side. I will wait for it to go back up and then drop down. I want to see the power of both the buyers and the sellers, and I want my team to win. In this case, I know what happened. It opened here, it dropped down, you took it to the short side, buyers stepped in, they got you stopped out, then sellers got back in, and that was supposed to be your entry, and you didn't re-enter, right? Which is not bad. I like that you re-entered after. That was good. Like now you already saw that the sellers are winning. Now it's a bearish engulfing crack, right? Making a new low right there. You're taking it to the short side, stop loss somewhere up there, partial, exit the rest, or break even, which is not bad. Totally fine. Let's take a look at the 5-minute chart. The 5-minute chart is looking good for a short. And remember how we said the candles are being traded? It's not an open close. It's normal to see that this candle will go up a little bit, not make a new high, get squeezed back down and make a new low, which will be your entry or re-entry. So yeah, you could have either held on to your share size if you had a little bit left without exiting to see what it's going to do, or re-enter here, because we know how the market's behaving. We see that the bigger time frames are weak, right? Making a new low, making a 15-minute low, and you could re-enter on this one and just go for the trend down there. When was this? 22nd, it's today. So Sajid, let's see what you did. Yeah, that was good. You're welcome. So Sajid traded snap. Now remember guys, we need to see the 1 minute chart with at least 30 minutes price action before you give that for us, but we also need bigger time frames, the 5 minute chart. Especially after 10 o'clock, we don't trade of the 1 minute chart. We trade of the 5 minute chart, right? You don't take it to the short side here. Why? I remember snap, it's okay, no worries. We remember how this looked like. This right here was the wick to the 9 moving average in the 5 minute chart. We don't trade against the 9 moving average on the 5 minute chart, right? Then you're shorting it one more time, which worked out, but I still wouldn't short it because then this was just the breakout right here. I would wait for it. I would wait for it to change the trend. I see that this worked out, and that's good. If this works out a lot for you, continue doing that. If you are not consistent with this setup, try to adjust it and come up with some rules for it, right? Avi, let's see what you did. So Avi traded snap. That's amazing. I love that. So you got into the long side already. Look at these guys. How do we get... I was always amazed. How do people get these entries? Why would someone enter after a red candle? Why would someone enter at the low? Now I know why. Because the bigger time frames are bullish. And this pullback on the 1 minute chart is nothing against this bullish candle, against this bullish hammer right there, against a new 5 minute high, right? Against a new 15 minute high. Like, it's nothing. So it will just be offering you a better entry. If you will enter right there, why not entering right here? That's what Avi did. Took it right there, and instead of entering up here, he's taking a partial. Too much partials, Avi. A little bit of partials. Yeah, you need to hold on. You improved a lot, by the way. Looking at your Twitter account, there is a huge progress in your trading. Good job. I like that. It's pulling back, and he knows it's pullback, right? He didn't take it to the short side here. He didn't take it to the short side here. He knows that after a strong move, the drop is most likely to be a pullback, not a reversal. It could be a reversal. Is he sure about that? No, but if it reverses, what's the worst case scenario? He'll exit at break even. If it works out, he will hold on to it, right? Partial on the way up. Consolidating, adding to his position. Is he sure that it will not reverse? No, he's not sure. What did he do? He did exit with the worst case scenario at break even. Would I have exited right there? No. I would have held on to it, and I wouldn't have increased my average all the way up here because we're still extended from the 9 and the 5. And I know that the stock could pull back and then continue the uptrend. I would have just simply put my average or held my average somewhere below view up a little bit to survive pullbacks, to see a real pattern. And the moment I see a real ABCD pattern, which is here, I will go in so heavy and move my stop loss to the next technical level. Right now, right here, I'm not sure what's the next technical level, which should be my average. That's why I'll give it an extra room after my ads. Alright, let me share with you my trade, guys. My bad trade. My badly managed trade. It's a good trade, to be honest, but I managed it really bad, which is sad. Now, look at this, guys. 60-minute chart, descending triangle, amazing. Last few days, really weak, amazing. Last few days, really weak. I love that. My plan on this thing, to trade it to the short side and not to the long side. Would I trade it to the long side? I told you guys, if I go against the direction of the daily chart and I go against the direction of the bigger time frames, I would go for a scalp. If I go with their direction, it will be a trend trade for me. Now I'm taking it to the long side with an ABCD pattern of the 1 minute chart for a quick scalp all the way closer to half day. I wanted to get $1 move at least outfit. Unfortunately, didn't give me that. I exit for a loser. It gave me my plan, which is a short. I'm taking it to the short side down there. You see, I took it to the short side, putting my stop loss at the half of the range because we're having a range which is getting broken. I'm taking it to the short side. It wasn't broken by that moment, but I went for the breakdown just not to get slippage. Having my stop loss at the half of the range, taking a partial at 2 to 1, adding right here for a reverse ABCD pattern. My mistake. Anyone, tell me my mistake. What's my mistake? Come on, guys. Exactly, extended. After 3 candles or 2 big candles, a pullback is to be expected. A pullback is to be expected. And a pullback could be all the way up and then down, right? And I'm not sure how big the pullback is going to be. I didn't need to add right there. If it continues to drop down, let it drop down, I'll take partials, right? If it makes a pullback and then a new low, I could add. This was supposed to be my place to add to my position. But unfortunately, I was so greedy because I was so short biased on it. Look, you see, look at the 60-minute chart. It's just, oh my god, I hate when it freezes. The 60-minute chart was just so clean. The moment it breaks down, it was just so perfect for a short, like so obvious, right? Now, I see right here that it's dropping down, pulling back, coming back down, reverse ABCD pattern on the 1-minute chart when it was extended on the 5-minute chart. I shouldn't have done that. Exit the rest at break even. So this was a longer an exit, short, partial, add, exit, right? So that was my trade. Now, I'm continuing to watch it because I'm short bias on it. I'm not taking it to the long side because it's not a long pattern, it's a short pattern. My plan initially to take it to the short side. I have this small wick right here. You know how the candles are being traded. It could go all the way up, not making new high, and then drop down. And I did see that. It went all the way up. I saw the power of the buyers. Now I see the power of the sellers. And I'm getting it to the short side, putting my stop loss, taking my partial at the daily level, adding for the breakdown. One more mistake, which is not bad, but yeah, I think I shouldn't have added right there. It wasn't ideal. We were just making lower highs, lower highs, lower highs, lower highs, lower highs, and a pullback was to be expected, right? And what do we mean by pullback? A pullback is at least a new 5-minute high. And I'm not sure how big that pullback is going to be. Again, bad ad. Greedy ad. I managed this ad so bad. Now, re-entered on it one more time the moment it made a new low. Why is that? Because we're having a reverse ABCD pattern on the 5-minute chart. Taking it to the short side, putting my stop loss somewhere up there. Now I'm going for the breakdown. My stop loss is somewhere around half of the range. Taking in partial at 482, and I just decided to exit break even. Now, this right here, if I managed this trade well, wouldn't have happened. Perfect entry. Okay, no need to add, pull back, coming back down, reverse ABCD pattern, retest, you see, this is the range, we're retesting, we'll love to see retests, add to the position up there, add one more time for the breakdown, move your stop loss to the half of the range, partial, pull back, going into half of the range, we don't like that. Is it going to break the half of the range? No, it didn't. It's continuing to drop down. I like that. We're going down in waves. Add one more time. Partial at the low of the day. Break of the low of the day. If that happens, add for the break of the low of the day. Move your stop loss to the half of the range. This is the way which I was supposed to play it. But some bats were bad, unfortunately. And that ruined my average and ruined my trades. So, do we have any questions, guys? I traded also, by the way, pins and Twitter. Pins, opinion range breakout. I like it for the break of the pre-market high. I saw the power of the sellers. Then the buyer is getting in control, taking it to the long side, stop loss. Partial. I had my partial sitting at 51.25. It didn't get filled, unfortunately. And it went against me. I exited at break even because the 60-minute chart didn't look good once it dropped down. It didn't look like so bad, but still, I don't like the double top with the second top lower than the first one. This looked like to me like fake breakout, and it was actually fake breakout. Twitter, another stock I traded and managed so bad. Not bad entry for a 3-bar play. Stop loss was so tight I went in for a scalp entry. I went in for the breakdown, so I put my stop loss at the half, like so tight. And quick partial exit the break even. That was bad. I think you should have played it for a trend, but I didn't expect it to be so weak, especially after yesterday's and it being at all-time high. But I guess if I just played it technically, putting my entering here, putting my stop loss at the high right there, see the retest not going to the half of the range, add to my position, and then ride the trend, this would have been amazing. Sometimes I just need to trade better, but I don't think this was bad. This wasn't so bad because the daily chart was just kind of strong. The 60 wasn't strong. The 60 looks obviously that it's breaking this level. After this level, we're having this level where I took a partial, then we're having the next level. So yeah, I think I could have just traded this one better. It's okay. Anyway, do we have any questions, guys? If not, have a good rest of the day. Trade safe, and I will be in the chat room. If you have any questions, guys, here on YouTube, feel free to email me, ayman@beatabletraders.com. And bye-bye.